Hello everyone and welcome to this session, day trading the indices and some commodities using NinjaTrader with the quantum indicators. And thank you for your patience. We have really been hit with technical gremlins today. First it was me. If you were with us earlier, our previous session where we looked at the Forex market, it was my system was causing me problems with GoToWebinar, and now David is trying to sort something out on his side as well. So we really have been, both of us today, a bit of a double whammy. So thank you for your patience. Before we start, can I just, as always, draw your attention to the disclaimer that I know you can see on your screen. As you all know, this can be a very risky business, so please, please don't ever think of using money that you cannot afford to lose. So before we start, if you've been with us we've had a couple of sessions this week. We've been looking at risk events, we've been looking at Brexit, what is likely to upend the market this week. In the US, we've also got earnings season, we've got China, there's a whole raft of events, if you like, pieces of fundamental news that are likely to upset the markets. So when we come to a new trading day, the first thing we really have to do, no matter what you trade, whether it's, as I said, whether it's Forex, whether it's, we're going to be looking at the indices in a few minutes, we really need a view of market sentiment, and we can gauge that in a number of different ways. And obviously day traders, certainly for the indices, the one place you really have to look is at the VIX. And the VIX, although it is the puts and calls for the S&P 500, everybody uses it as a measure, as a gauge of how the market is feeling. Is it risk on? Is it risk off? So it really is, your first port of call. Then of course we've got bonds, and then we have other instruments in the markets that we can have a look at. What's gold doing? What's oil doing? Etc. etc. But the VIX is a great one to start with, and I don't have the VIX on my NinjaTrader platform, so I go over and to investing.com. And what's interesting about the VIX is obviously since we had all that volatility earlier, it is now just below 20. It's sort of stuck in the 20 region for a little while, and it had a little bit of a fall, a bit low. I think the lowest it's been is what it got to just under 18. Here we are, 1776, and where are we now? We're back to sort of 19. And even these very small movements that you can see in the VIX already give you a flavour of what is happening at the moment, and perhaps what is likely to happen as the session develops. Generally speaking, there doesn't seem to be an awful lot of movement, a sort of mild risk off, if you like, as we can see here. The S&P not doing fantastically well, just down slightly. So it's all a bit meh. Given the volatility that we've seen, it can be a very, very frustrating time, particularly if you are a day trader. So this is when you have to perhaps look at a non-time-based charts, and we'll be looking at some Renko charts and some tick charts to really help us, try and drag out some points, some pips out of this market. And of course, as well as the VIX, we also have a look at what the yen pairs are doing. I seem to have lost one of my charts, which I don't understand why. Let's have a look. Where's it gone? No, that's disappeared. No matter. This is actually the CAD yen that we were looking at in the previous session, because I have a position in this Forex pair. It's a pair that's tied very closely to market sentiment in the form of the Canadian dollar. The Canadian dollar is tied to oil. If oil prices are rising, it's generally, the things are sort of moving along. And we looked at at the chart for the CAD yen in from the perspective of volume price analysis. We looked at it from the perspective of fundamentals, and also from anything to do with oil obviously has a very strong political element as well. And in fact, just to carry through, because I know people watch the sessions, sort of the recordings, let me just go back to my 5-minute chart here. Yes, in fact, we were talking about the this particular pair when it was around the volume point of control, and basically what I said was the volume point of control here on the 5-minute chart would certainly provide a nice strong base if this was to go higher. I want it to go higher because I'm actually long this pair. Even if I'm long any of the yen pairs, my view is that market sentiment is likely to improve. And what I also want to see is the VIX falling, because that means that indices are going to go up. So I just want a nice rosy picture out there, and that kind of gives me, as I said, the context of what we are seeing in the market, a sort of global view. And that's how David and I start pretty much from the moment we wake up, when we start before the London session, and then we review the picture again coming into the US session, because for us we're very lucky. We are able to trade both the London, and now we've got the time simply by virtue of our geography, as it were. You know, often what happens, you can have a complete about turn of sentiment in these changeover crossover sessions, and you really have to be aware of that, certainly in the forex market. And as I've been speaking, we can see here the S&P has ticked up slightly as the VIX has gone down. What that also means is, because you have this kind of flip-flopping of sentiment, and it can really turn so quickly these days, some of the headlines that you read on news sites, and it's certainly not their fault, because it takes time to put together analysis and articles. You'll read a headline saying, great, Wall Street is opening up, and you look at your chart, you think, well, I don't see that. You really have to so unless you have a real-time feed, just beware of the headlines that you pick up on news sites such as investing.com. Great site, great analysis that you read, great free information such as the VIX. As I said, you've got what the bond yields are doing, you've got commodity prices. This kind of information, it costs money. These guys are providing it for free. So, as I said, simply because the headline occasionally is out of step with what is happening on the charts is really, it's not their fault. The market just moves very, very quickly. David, are you ready? Or
I am, yes.
I'll move over to you then. I was keeping them entertained.
Absolutely.
Yes, you can move straight over. Hello, everyone. A very warm welcome. Sorry about that. Just fraught with technical problems at the moment, so apologies, and I hope you can bear with us. Let's just move that out of the way. You don't want to see that. And hopefully you should be seeing my screen anytime now. And I've actually started. Well, let me start. Let's go back to. No, let's stay here. This is on the tick workspace. And as Anna said earlier on in her, when we were doing the Forex session, she has a completely different layout to the one I have. This is what I tend to use most of the time for all my trading, particularly for when I'm trading on the tick chart, as here, is to have the 3 tick speedometers down the left-hand side. So I've got a 1 minute, a 3 minute, and a 5 minute down here. And then I've got the 3 associated time tick charts for that, which is down these 3 here. And then in the center, I've got the Renko as well, because we're using, on this workspace at any rate, we've got 2 non-time-based charts in the Renko and the tick, both of which serve the same purpose in essence, which is to reveal momentum, which is lacking at the moment, as you can see. It is relatively quiet, and there's not a great deal going on in terms of activity there. But if we go back over onto the time-based workspaces, where I've got all 3, that was on the ES, and here I've got the YM top left, in the middle, I've got the ES, and over on the right, I've got the NQ. They're on 5 minutes, they're on fast time frames. And then down at the bottom, I've got the daily charts, the equivalent for each of those. And it just goes without saying that when we're looking at the daily, and I mentioned this earlier on today in the earlier session, is that the daily chart just gives you context. It's so easy when you're on a fast tick chart or if you're on a fast Renko chart and you see something developing and you think it's quite a big move. And actually, when you look at it in the context of what's going on, just move that out of the way. Is self-evident when you look at it from the daily is this is what we're trading. That's where we are at the moment, this tiny slither of price action. There are moves in there. We've had a move to the downside here, so we've had price action in here. There was a move. It's come back. The market at the moment has a sense of positive sentiment to it. If you were to ask me, flip a coin, which way do I think it's going? It feels as though it wants to rise, but the rise is very labored at the moment. It's not particularly strong. We had a decent up day with some reasonable volume under it, but what we're not seeing this sort of general levels of volume here that we saw through November. The volumes at the moment are relatively muted. They're not excessive. We're not seeing extremes even on this widespread up day here where we saw the market rally very strongly. The volume's okay, but it's hardly what you would expect to see with such a strong move, and even more so on the volatility candle here. There's an awful lot of uncertainty around the market right now. There's an awful lot of things, as Anna said, that can just bring the market to a shuddering halt. Volatility, reversals come in, and someone says something political, whatever it may be. There's no fundamental news, or very little fundamental news today, at any rate, of any great consequence. So there's nothing really to drive the markets. Have we got the G20 on at the moment, or is that
the G20?
Yeah, and there's just a feeling of nervousness about the markets right now. There's no strong bearish sentiment, but equally there's no strong bullish sentiment. And really that's all reflected in terms of where we are on an intraday basis in terms of the volume point of control. This is just the YM, but they're all pretty much the same, probably about full size. All the charts are pretty much the same. You always get the volatility at the open when the physical market opens alongside the electronic. This is the electronic volume on Globex. Doesn't invalidate volume. It's just simply reflective of the fact that as we get underway here at 2:30 our time in the UK, big surge in volume. We've got both markets running in parallel. That's what we expect to see. So in terms of comparing volume on an intraday basis, this is the region of price and volume that we can compare one with another. We always get this volatility. It's even more pronounced today where we're trading around the fulcrum of the market, which really just says it all. The volume point of control is sat there. Volume is building. Volatility. No strong sentiment, one or the other. Got a decent platform of price support in below. Not much in the way of overhead volume resistance there. But we're just trading around in a tight range with no direction. The trend monitor has transitioned to blue, so it's basically saying that sentiment remains bullish for the time being, but the longer this continues, then ultimately that may transition into a transitional color. We will see as the session develops. Similar sort of pattern on the ES, pretty much the same. And again, as I said, you get this sense that the market wants to rally, but there isn't enough fuel yet to drive it. You get the feeling that it wants to break away and perhaps move higher, but it's just not delivering right now. The only thing I would say is on that last candle there, which was a down candle, very light volume. So there's not a huge amount of selling pressure right now. But again, we're trading around the volume point of control. And from a trading perspective, if I was looking at this for trading opportunities, I'd certainly be looking at the tick charts. And it's a question of deciding where the levels are that you're comfortable with, that once breached, you then feel happy about taking a position either from a price resistance area breached or a volume node that's been breached or whatever it may be, and then using the indicators to help you to gauge the risk on that particular position. And over onto the NQ, again, very similar picture. Trading around the volume point of control, ton of volume sitting there at the moment. Trend monitor's blue, relatively light volume overhead up to 66.95, up towards 67. But until the market develops a trend, then we have to wait and be patient, sit on our hands. If we're index traders, this is what we're looking at, this is what we're waiting for, and we've got another six hours or so to go. So we just have to wait and be patient and watch the charts and just sit through the congestion phase and just accept the fact that a congestion phase will break down at some point, and when it breaks, there will be an opportunity to trade. And all the daily charts are pretty much the same. Let's head back to the tick charts. There we go. And I can tell you straight away that in terms of the tick activity, this was the number that the ES was trading at not long ago, certainly in the last 10 or 15 minutes, of 6,765 odd ticks. And we are now down at 2584. So the activity is just not there. The tick activity has fallen away to absurdly low levels. For the ES, the sort of tick activity you're looking at is anywhere in the several thousands, from 6,000 up towards 10,000. That is a normal trading phase of price action where you've got a lot of tick activity going through. In other words, there's a lot of activity in the market, a lot of volume activity in the market. But as soon as the activity dries up and falls away, these numbers would be typical for the NQ maybe, and the YM possibly a little bit less than that. But for the ES, which is the most heavily traded index of all, then these numbers are very low indeed, and really signified on the tick speedometer by this transition to red. We've got red on 1, we've got red on 3, and we've also got the red on 5. So you can see here the actual tick activity has drained away substantially from the open over here, and we're now waiting for the markets to develop a trend. If they are going to develop a trend, there's nothing to say in the rule book that they're not going to sit here all day and trade in this very, very narrow range. And one of the reasons we developed the tick speedometer was very much to blend a volume-based approach where we can look at price action and volume in a traditional way. Just widen that out a little bit. Where you can look at the volume and you can associate it with the price action and apply traditional volume price analysis to that particular chart, which in addition delivers the information about the tick activity as it moves through these phases of colored price action. The orange is the norm, if you will. It's the standard that you expect to see in a trading day. Green is high activity. That's when you've got a lot of activity coming into the market, and red is when the market is very, very sluggish and tick activity is draining away, as is interest in the market. And when it moves into those red phases, that is when you're likely to see price congestion. And the indicator delivers the tick setting for the tick chart, because this is the perennial problem for index traders, indeed for any intraday traders who are trading on tick charts, and the same applies to Renko, is what do you set that chart to? How do you know what to set it to? Do you guess? Do you just pick a number out of the air? Do you talk to other traders in the forums? What do you do? And of course, the other aspect to it, as I alluded to earlier on, is that the actual tick activity or the optimal tick setting for an instrument is very different. They all have different characteristics, and therefore different tick settings are required. If you're trading gold, for example, you'll find the tick settings for that are much lower. If you're trading the YM, it's much lower. You're trading the ES, it's much higher. You trade any currency pair, a currency future, whatever it may be, the tick setting will be delivered by the tick speedometer, because it'll deliver the optimal setting for that particular time of day, because again, that will change through the session. This is not a static thing. It's not saying I'm going to trade the 500 or the 400 tick chart and I'm going to trade it all day long, because the market speeds up and slows down. It's what momentum's about, which is what this does also. It's constantly changing. You can see here on the 3 minute, we've upped a little bit. We were down at, I think, 2,500. That's starting to pick up now. The actual is actually over 5,500. Down at the bottom, we're still pretty sluggish on the 5 minute. We're still running along at 2,500 odd ticks. So, you know, there's no great momentum in this market. We're flip-flopping here between orange and red. Nothing going green at the moment on the fastest time frame of all, on the 1 minute. So it's just a question of being patient. I've got the Renko chart here as well. Similar sort of picture. It's building these levels all the time on the accumulation distribution with regard to support and resistance. We've got the pivots constantly building upside, downside, telling us we're in congestion, just confirming that. The trend dots as well. I've not got the trend monitor on here, but I could have it. It would work in exactly the same way. So it's a question of being patient the whole time, which, let's face it, you know, we all find difficult. We want to be trading, we want to be getting in the market, making money, but at times like this, it's a question of being patient. And, you know, it's not a bad lesson to sit there, watch the charts, and really then look at the charts and say, well, what are my levels going to be for a move away from this region? This has now ticked back up to 67, 65. These two numbers here, by the way, are not, this first number is nothing to do with fib, other than it's a way we derived to ensure that the numbers didn't change that frequently. You can see on the actual here, this is flicking up and down all the time. It would be impossible to change your chart that frequently. Just wouldn't work. So we just deliver the closest number to the actual so that it means you don't have to change the setting quite so frequently when you're trading on an intraday basis. We're now up at 67, 65. Let's just pop this up. And if you were looking at that as a trading opportunity, we're trading around the volume point of control. We know we've got strong resistance in here, as on this dash line on the accumulation distribution. The volume is falling away as we climb up towards 26, and we've got some price congestion over to the left here. So what is a reasonable distance if we think this market is going to continue higher? Where would we look for a potential opportunity to get in once a trend has developed? In terms of the upside, certainly I would say somewhere beyond 26, 26 would be a reasonable position to consider, because I wouldn't personally be comfortable battling away, first of all, through this lot here, and secondly, not that far from the volume point of control, which could well come back into play with a move up here and then back down again. So I want to have a reasonable distance of travel away from the volume point of control to establish a trend, in inverted commas, of some strength before I actually decide to jump in the market. That's kind of my thought process that I would go through if I was looking at this right now. Over on the left, you can see we're in red still, pretty heavily there. Red down here. We transitioned to a bit of orange, so we've got a bit of a pickup on the 5 minute, but you know, we pull that up full size. That's the sort of region we're looking at. You know, it's building resistance in this area, 26.19, 26.20, and once it's moved beyond that with a degree of comfort level, and that comfort level, you may decide that you want a bigger region than that. You may decide that 26.25's a more comfortable number for you to get in. But once you feel that you've got that level of comfort, you've got some decent support in underneath, you're looking up the chart and you think it's pretty clear above, then you know, you make a decision to get in. And of course, you'll be looking at the associated volume with the price action to give you a heads up what's going on. And then you'll be looking obviously at all the indicators, trend monitor, the trend dots, you'll be looking at the Renko, see what's going on there, and make a judgment call accordingly. And the other thing also, looking at it from the other way around, is you'd also have the currency strength indicator running in background to give you an idea what's going on in terms of yen strength and yen weakness, because that'll give you a heads up in terms of sentiment. And of course, as Anna said, you'd have the VIX running as well alongside to give you a view on that. And you'd also have the indices up. the currency indices in particular to give you further insight into the current state of play of those. It's all pretty flat at the moment. Any questions, by the way? No? Okay. No, thanks, David. You're running late. Yes, we you're forgiven because we ran very late this afternoon. So apologies about that.
I was reading some headlines about that. They're just going nowhere.
Yeah, everything's going nowhere. I'll just switch off for a moment. I haven't gone away, don't worry, and you haven't lost sound, so I'm still here. This is a very good lesson in patience. I'm sorry to keep mentioning the P word, but it is. And what also is very easy, a trap to fall into, is at some point there will be a fast price move, and it's very easy to suddenly jump in without considering it first. You jump in on emotion. Excuse me, I'm just going to switch off for a minute. Thanks, darling. Let's just go and see what's happening, see if we've got anything going on in commodities. Let's just see what's going on in terms of the primary indices. Let's move that out of the way. Got some more dollar buying coming in. This is the dollar index. These are all fast time frames. This is on the 5 minutes, so this is the dollar index on 5. Trying to find some momentum there. This is the yen index. Was weakening at the start, but is now starting to rally again a little bit. So that's telling us that it's certainly not risk on at the moment, at any rate. And over onto the euro. See what the euro's up to. Very spiky, but relatively bearish. Lots of Brexit news around all of that lot. Let's just head over to commodities. Not quite sure what state my commodities charts are in. Actually, I don't know why they've all got scrambled up. Sorry about that. Let's just move that one over there. Move that to the middle. There we go. And I've got oil at the bottom there. Let's just move that one over there. There we go. Got a lot of volatility on oil at the moment. Let's just see where gold is. Gold has been struggling for an awful long time, trying to get through 1300, which it just cannot get through. And it doesn't matter what the dollar does. It doesn't matter what risk sentiment is like. It doesn't matter about shocks to the market. It just doesn't seem able to get through that 1300. If it does, then it'll have a very strong platform of support in place. But again, the volume is, it's not terribly strong. It's okay. It's supportive. I mean, you've got the usual anomalies. You've got tests. You've got not tests. You've got rallies, attempts to rally, and it's just hasn't got the momentum to drive through that region. But from an intraday perspective, there's always trading opportunities. It's in a relatively tight range, but nevertheless, there are opportunities there, but quite spiky price action. Not strong trends at the moment. In terms of oil, where are we? There we go. There we are. On the February contract, I think we've moved on to the next contract, so I need to update that one. Let's just go back to the indices, see if anything's developing there.
Oh my lord, I can see about the YM.
Gosh. It's what we call a washing line.
Sliver.
It's a slither of price action on the daily. I'll leave that up for a minute, full size. A bit more interesting watching all of them doing the same thing. everyone thinks trading's terribly exciting and lots of testosterone and.
Well, it is like when you have Brexit, but those are few and far between, aren't
But when you have days like this, it's not like that at all. And of course, you have to be aware of the boredom factor, which is not easy to deal with. And it's also the other aspect to all of this is, and it's certainly true as far as trading a single instrument is concerned. If your trading day is based around, let's say you're an index trader and that's your trading day, of course you can trade it on Globex, but if you trade it primarily when all the exchanges are at the exchange and the electronic are running in parallel, then that this can be a quite a harsh lesson, because you are restricted to a few hours, you're restricted to one instrument, so you can't go off and look at, as we do in Forex, you've got 28 other pairs, even more than that if you wish, but primarily 28 pairs to go and consider, look at opportunities, all sorts of things going on, some moving, some not. If you're trading gold or you're trading oil or you're trading an index, really that's what you're doing, and if it's not moving, it's not moving. And that's when the boredom sets in. It can be quite an issue.
So could you explain to Lisa what you mean by the next contract?
Yes, sorry. I always have my chat box closed. Apologies. What do you mean by next contract? The contracts roll over the whole time. As you can see at the top left here, we're trading on the March contract now for the YM. So we're on the 0319. I suspect the oil contract is now on March as well. That rolls forward fairly quickly, certainly well ahead of all the other contracts. And generally, they're all different. Gold will be on maybe a different rolling program in terms of quarterlies, but we have to update the futures contract because that futures contract expires and rolls forward to the next futures contract. And as I say, we're on March here, and when we get into March, then we'll roll it forward to June and so on and so forth. And that applies to all the futures contracts, and they all have different patterns. So I hope that explains that one for you, Lisa. Markets go up and they go down, and they go up again and down again, and they're doing it intraday at the moment. Let's pull the ES up on the day. That's where we are. Decent bit of support in underneath, but now as the markets rally, then as we get up to these levels here and up to 2750 and 2800, it's a question of battling through this region here around the volume point of control. We are actually in a relatively light volume node in terms of the daily at any rate. Let's go back to the tick charts again. See the tick activity down here, you may not be able to see it, but it's 2584, so we're back down to a third of what we were earlier on. And that's what you expect to see. When the tick activity dies away, you expect to see congestion. There is no activity, there's very little participation in the market. It's just going nowhere right now. And generally what happens with these sessions is that as soon as we end the webinar, the markets take off and develop nice trends. So you never know.
Right, actually, if you pass over to me.
I'm going to pass back to Anna for a moment, just for a change of voice. Do you want to change screens as well?
Yeah, we'll change screens.
I'll keep an eye on these. If anything starts to develop, well, I will holler. got a feeling that it's actually going to take off any minute, so I'll keep an eye out.
Just moved over because I've actually got the YM, and my configuration of charts is slightly different to David. And I know this has got a question. I think you just want a bit more explanation on the histogram, which is on the volume point of control. Just to say that we've revamped the website to make it much easier to discover information on the individual indicators and the package of indicators that we sell. And you can see here we've also developed indicators for TradingView, and a lot of our clients are taking these as an additional to what they have either in MT4 or Ninja, because you can run them on a Mac, on an iPad and Android devices, and what it does, we found, is it's really sort of freed up traders who, you know, it stops you being tied to your desk, as it were, which is, it's not all the indicators because of the software, because of the code that you have to use for TradingView, but we are looking into it. It's called Pine, and it does have certain restrictions, but we're looking to see what we can do with the ones that haven't made it over to TradingView. But let's have a quick look. Here we are. Let's have a quick look. The VPOC, what Lisa is referring to, is the volume point of control, and I certainly, David will explain the histogram that is produced by the indicator on the chart, but everything is laid out on this page now so much more easily, and videos and as I said, support pages as well, as you're talking about the low volume and high volume nodes and how they will impact, how you need to interpret them to make sense of what is happening to the price action that is developing on your screen, but also how they are going to come into play as the price action then moves into one of these regions. And the reason I've got the YM up and the other charts that I've got to support the YM, I have over here down on the left side, I've actually got a yen index, because we know with the yen, if the yen is falling, sentiment in the market will be rising. So it's good, you know, we're talking about sentiment, we're talking about the VIX. Well, the yen is a great currency to have to have a view on, because if it's falling, sentiment will be improving. If it's rising, sentiment will be souring. I also have our CSI from our Forex suite of indicators. I've got all the indicators, all the individual currencies on here, but I've got this is the purple line, the yen moving down. It's also, what we have here is the dollar moving down, and the pair that you can, there are various pairs in Forex that you can monitor for sentiment, but certainly dollar yen is one of them. But what we don't want to see is, we don't actually want to see the dollar and the yen moving together. But in terms of time charts, what I have here, I have a daily, just for context, and so I can expand it. This is what we're looking at, this candle here at the moment, which is bouncing off this support platform, as David said. You've certainly got a wick to the underside of the candle. What that tells you is, at the moment, that the price action is quite narrow. We've seen some action in the YM. It's got a reasonable amount of support here, down at, what was it, down in 23, 20, just under 24,000, in the 24,000 region. Just reduce that down. So that gives us context. But when we look at the time charts and the Renko charts, each one of them is around the volume point of control. We've got the volume point of control on the Renko. So if this is going to carry on higher, this has got to break up over this. I've actually taken the histogram off, the histogram element of this indicator off this chart, because it's the Renko, and I just want to see where this yellow dashed line is, because this is the fulcrum of this chart at the moment. So you know, it's clearly telling us if it's going to go higher, it's got to move above this level, or this will cap any move and it will sell off. You know, there's a lot of resistance here at the VPOC. And just to confirm how you know, how sluggish it is at the moment, on the 3-minute, you've got the VPOC here, although the price action is slightly above it, which is encouraging. And on the 10-minute, it's just above here as well. And really, we have to wait. There is nothing more that we can do. When markets like this, we need patience. If we're going to be in a narrow range and you still want to be able, you know, have the opportunity to take some points, really going to have to look at time charts in conjunction with some kind of non-time based charts. David has tick and Renko. I tend to stay with just the Renko to get some help with entries, staying in my levels, by using the VPOC and the accumulation and distribution indicator, and also more importantly for exit, because this, you know, if it is going to be rotating around this this zone here, the VPOC, the chances are it will pull away and the chances come back again until we get some firm direction. And just to, before I pass back to David, in our previous session I mentioned an email that I'd received from someone who just actually bought one of the volume price analysis book. I won't mention his name, and I was really touched by this email. I'll just skim it. I mean, basically, he says, "Good morning, Anna." He tells me he blew up one account at the beginning of 2018, losing close to 30K. His friend, he actually shared the book, The Complete Guide to Volume Price Analysis, and volume was the tool I needed to create the edge I was missing. Logic is clear, it's a no-brainer, and incredibly grateful for the work you have helped to transform my career and his P&L. He exclusively day trades NQ, and because he's taken one concept out of VPA, actually effort v reward, which is one of the Wyckoff rules, and he's tweaked it. He just wanted to share it with me and to tell you what it has done. And he uses order flows with effort v reward. He's created a way of being able to read the markets, making most of his money. In fact, in the first 30 minutes of the day, when he actually turns off, that's it, he's done for the day. So he's got the discipline to also be able to say, right, that's my window, that's the opportunity I'm going to take. And, you know, bringing VPA into the other tactics that he's been using. And what I wanted to say, and I said this earlier, with volume price analysis, the beauty of the methodology is you can adopt it wholesale. You can, which I hope David and I, you know, you do, but you don't have to. You can take elements of it and, you know, integrate it into what you are doing already. And we have found with traders who have perhaps not doing very well or not doing as well as they should, that's really has made the difference. Those concepts in VPA that they have blended in, it suddenly makes everything clear to them. And that's what I was going to say. And as I said, I'm delighted. I'm always delighted when you know, people stop losing money, because it's it must have been very, very painful for him. And from you know, for you, if you've incorporate VPA into your trading, fantastic. If you haven't, and you haven't you know, considered it, I urge you to do so. The book is $4.99 for the ebook on Amazon. It's $4.99. It could make a huge amount of difference to how you are trading and your success. I think possibly we are getting a little bit of movement, David. The ticks. The nice thing about the tick speed is that it actually also picks up the momentum. As more ticks come into the market, we know the market is speeding up. I'm just going to pass over to David. I'll keep an eye on the NQ, on the YM, also on the yen. And I want to move over because David has said he's got the tick speed to see if we've actually got some action coming in. I'll just move over, David. And if you could answer Lisa's question.
Thanks, darling. Just yeah, I'll come on to that, Lisa, on the on the VPOC, sorry, just gathering my thoughts. Sorry, I was just keeping an eye on this because, as I mentioned earlier on, my sense is that the market is trying to rally. It's finding it difficult, it's finding it tough, but it is kind of finding some momentum. Just looking at the volume that's going in here. Just pop this up, pull this up. We had a bit of a surge earlier on while Anna was talking. We're starting to see some activity coming in now. You can see this is going green. We've got some decent volume coming into it. Need to see how this candle closes. Don't particularly want any wicks to the top, certainly not the top at any rate. Let's just pop that down again. A little bit of a wick on that one. So, and it really just reinforces the market is trying to rally, but it's struggling all the time. You know, it tries to rally and it's struggling. Let's see what the ticks are up to. Okay, we're on 6.7. Let's just change that one over. That one's okay. That's dropped off a bit. That's 9.87. So we'll just tick that, drop that down. Drop that down to there. This one's gone up to 6.765, same as the other one. So 3 and 5 are running at the same speed. Same chart, therefore. That will no doubt change at some point. We're in orange, we're on red here, we're on orange here. Renko, from a Renko perspective, this was the very strong level that was building all the time where these pivots were. We had the resistance overhead just below 26.18. That's now a decent platform in there. We've also got a further platform here which is holding. It was breached temporarily here, but it's kind of holding at the moment. So we're trying to move higher the whole time.
Actually had a power failure outside.
Oh.
Not here. Just to add insult to injury today.
You're serious? We've had a power failure somewhere. Blimey. Not in this house, but somewhere locally, apparently.
No, in here as well.
Oh, we've had one in here. Okay. Yeah, I just answered the question about the histogram before I forget. Just pop this up. All of these are controllable. These levels here, these different colors on I don't know what color you call that, just sort of brown and light brown or pinky brown, whatever. They're really just there to try and highlight where those areas are of high volume nodes and low volume nodes. They're all configurable. You can change them. Generally speaking, I don't have them on. I just happen to have them on here, but normally I don't. Because I like to have the support and resistance, the accumulation distribution showing clearly, the volume point of control, and just have the histogram on itself, because I can eyeball where the high volume, low volume nodes are. So it's really just something else, and it's very easy to take them on and off. Just go into the indicators just while that's. Sorry, Dan? Yeah. Have we got a? Is it? Oh, there we go. Sorry, I don't know what was happening there. If I go into the volume point of control here, you can either have show support and resistance. I've got it ticked on, but if I tick it off and just apply that, then it will remove them. And that's really all it's about. It's just helping to define those regions where you've got high volume and no volume nodes. And that's normally the way that I tend to have the charts displayed. And obviously you've got the option to have show the volume point of control, and you've also got the option to show the volume profile, but then both of those are important. The support and resistance aspect is less so. It's literally showing you the high volume regions and the low volume regions in those different color combinations, which of course you can change here as well. Okay, where are we? We're testing this region of potential resistance, which is pretty strong. I hope that answers that one for you, Lisa, by the way. You're more than welcome.
I just said it can seem daunting to take.
Yeah. Markets are always there, even on days like today. they're there, they're teaching lessons of patience. There's always a lesson that you learn. And Anna and I never stop learning. And we've been doing this for over longer than I care to mention, but that's 20 years or more now. And we never stop learning, and there's always something new that happens that you think, gosh, never seen that before. Like the other week with the flash crash on the yen. I mean, that just came out of absolutely nowhere. I think it was about 10 o'clock at night, 9 o'clock, 10 o'clock our time. We're just sort of sitting there watching the screens. And I had to sort of double check because I thought this is some sort of glitch had occurred. I thought this can't be true. And that's how dramatic. And that's what we have to face. It doesn't happen very often. If we get through this region here, then we're into relatively clear water. The volume's falling away. We've got very relatively light price resistance overhead. But again, you see on the 1 minute, we've gone into red. The tick activity has tried to rally. You know, I said at the time, I said, we don't want to see a wick on this. We're seeing decent volume driven in, and what have we got? We get a wick to the upside. It's not telling us the market's going to roll over and fall, you know, downhill suddenly and get a developer price waterfall. What it's telling us is that, you know, this is weak. This is not strong. If that was strength, this candle would have closed at the high, and it hasn't. It's come off the high. Decent volume under there, not going anywhere. This is another one. Again, you know, it's telling us there's volume being driven in here, but it's really not following through. The interesting thing now is whether any of the down candles we see rising volume, or whether we're just seeing a general tail off in activity again. A lack of interest, a lack of participation, call it what you will. And really it's back to what I said right at the start, which is setting your levels as to what is your comfort level in terms of getting in. If you're going to jump into this market long, where do you want to see this market before you actually make that decision? And, you know, I said sort of around this region, 26 up here somewhere. Once we get into this light area of volume, you might well be looking at that as a potential opportunity to jump in. And you might say, well, you know, you've given up 4 or 5 points here. Yeah, I appreciate that. But, you know, that's part and parcel. You may be more comfortable getting in now. You may think, right, fine, I'm a higher risk trader. I'm quite happy to get in here. The signals are telling me that, you know, we've got decent support. We're looking at the Renko. We've got decent platform in underneath. And, you know, it's looking healthy. The trend dots have transitioned to blue. Not a lot of way in the way of price resistance overhead. That's a personal decision. For me, the market's not moving fast enough right now. And the activity is just flip-flopping around all over the place. We've gone down to 987 now on the tick, which is very, very low for the ES on that sort of time frame. The others are holding. This has dropped down to 4181 now. I'll just change that over. It's one of the beauties of NinjaTrader. It's so easy to change tick speeds. It's the same on 7 and on 8. And on Ninja 8, you've also got the interval linking, and you've also got the instrument linking up here. So you've got interval and instrument, which also is extremely useful. So you can build a workspace and instantly change the instrument, and the whole lot changes altogether. It's a very handy.
Right, David, do you want to stop there?
I think we are going to stop there because it is quite, I was going to say painful, wrong word. It's probably not great viewing, but it's certainly a good lesson in patience. So I'm going to pass back to Anna. Yeah, just to answer your question, Lisa. I've jumped in, what line would represent when you would want to consider getting out? Good question. All you would do in that case is you'd be looking at higher levels on the chart, as to the opportunity that you were about to take. In other words, what have I got above me if my entry is at, let's say it's 26.26? What is in the way to prevent that price move developing? Have I got a lot of price resistance overhead? Have I got a lot of volume, potential volume resistance in the way? What does the chart look like? It's not about risk and reward. It's about looking at the chart and trying to understand and interpret what the chart is telling you in terms of the opportunity. If you've got clear water above you in terms of price action, in terms of volume, whatever it may be, and it's giving you a decent return for what you're looking at in terms of the risk you're laying on the table, then it's a trading opportunity that you'll take. If you look at the chart and think, actually, do you know what? I think this move may run into difficulty and only deliver a handful of points. I'm not prepared to take the risk. That's the decision only you can take. But the difference is, the key difference is, you are actually using the price chart to make that analysis, that determination of risk. You're not using some absurd risk-reward ratio that you've devised which suits your temperament. In other words, you've said, well, if I'm going to risk 10, I've got to make 30. It's nonsense, I'm afraid. Use the price chart to arrive at that conclusion, because the price chart will tell you where that instrument is likely to struggle and how much opportunity is available to you if you're going to take that particular trading opportunity. And that is the way to do it, I'm afraid, and not use some fictitious risk reward that you've devised for yourself. Sorry about that. Sorry if that sounds harsh, but that's the way it is. I hope that answers that one for you, Lisa. Missed the question before. If you enter a trade regardless, Jim, if you enter a trade regardless of what instrument you are trading, I think I've missed the rest of the question.
How would you use VPA? Like, if you enter a trade,
oh, I haven't got the rest of the question, funny enough.
Another one.
It stops after HO and sorry, what's the actual question?
If you enter a trade,
yeah,
regardless of what instrument you are trading, how do you set your stops using VPA?
You set your stops in exactly the same way. Whatever instrument, the instrument is academic. Stop placement and management is covered in detail in the Forex program, but it applies to all markets, because in fact it relates to exactly the same point I was making about Lisa's question, which is this, that you use the price chart to help you define those regions where you want to set your stop loss. Because in an ideal world, let's take an example. Let's pop this up. It could be a time chart, tick chart, doesn't really matter. Let's suppose, for example, you're taking a long position here. Where are you going to place your stop loss? Well, from a price-based perspective, you really want to place it below some protection. Now, clearly, placing it under here is way too tight. Placing under here is too tight, in my opinion. If I was looking at this as an opportunity, I'd want to be down here somewhere. So your stop loss will be in at this region. Now, it can only be put there assuming it fulfills your money management rules. Your risk and money management rules may dictate the fact that you can't move to that level because it's too wide for you. In other words, this 5-point or 6-point stop loss is too big, too much of a risk. Your money management rules may dictate that you set them to a lower level, in which case you're going to have to tighten them up and maybe set them under one level here or possibly under here. That may work for you, may not. But that's how to set a stop loss. And the same applies, obviously, if you're in a long position, a short position, doesn't matter. You look at the price chart and you look for those areas of price resistance and price support, which will then act as a barrier should the market reverse against you, because that's what you want. You want to put your stop loss behind those market-created regions of price action, which will then provide a barrier should the market reverse against the position you're trading. And that, again, in my humble opinion, is the way to set your stop loss, but caveated by the fact that it's got to fulfill your money management rules. And if it doesn't, you can't put it there. You'll have to find another area. Sometimes you don't have those areas. You have to work with what's on the price chart. It's a fact of life. But if you've got a really nice level of price resistance or price support that you can then place your stop loss behind as a barrier, that is terrific. That's what you're looking for the whole time. Hope that answers that one for you. Great question. Thanks, Jim.
Okay.
Yeah.
We're actually back on the YM, and I've been watching the yen index. It was falling nicely, and now it's sort of coming back a little bit. But what's interesting on the YM is this is since we switched screen. This level here, this is the BPOP. This is the this level here, which is the accumulation of distribution, has also strengthened. So it's got a bit of work to do if it's going to carry on higher, and it's going to need volume to do so. But if it does manage to break through that and go back to your stop loss, well, this is a natural, this is an area of which gives you a natural protection, in the sense that this is where the market is saying that if it comes back, this is where it will, it will cushion any pullback, comeback to this region. But the first thing it's got to do is actually got to go beyond that. And support and resistance, the elements that make up VPA are obviously price action, you've got volume, you've got support and resistance, you've got candles, you've got candle patterns, and you've got time. And we take not just time charts, but also the time a move takes to develop. And using a non-time-based chart with a time-based chart allows you to see that in greater detail. If you either have a tick, as David has, you can monitor, you can actually see the tick activity, feeding through into the market. And if the tick activity is dying down, you're in a very sluggish market. Markets don't stay sluggish forever, just as they don't stay volatile forever. And you, as a trader, you perhaps have to develop different tactics to suit the market condition that you are faced every time you open your charts, which is why David and I say, I'll say this carefully, you can develop a particular trading tactic, reversal trading, for example. You say, that is my tactic. So you will only trade the chart when it offers a reversal potential. And with a reversal potential, you'll be looking at 2-bar reversals, you'll be looking at engulfing candles, you'll be looking at hammers, shooting stars. You are very, very precise, and that's the only time you'll be looking to take a position. The downside of maybe just having the one tactic is you're going to have to be patient. And just wait for those opportunities to develop on the chart, and then you take your trade. It could be, you could maybe not just have one. You could look at another trading tactic where perhaps you are something is in congestion. It also depends the type of instrument you're using. If you're using options, for example, you've got to match your tactic to the chart condition. If you're trading a covered call, the chart has got to be in a certain phase of price action. The certain phase of price action is mildly bullish. That is the preferred phase of price action for a covered call. If you're trading a straddle, it's going to be probably exactly that we see here now. When a market is rotating around a volume, it's in a range, it's in a tight range, really don't know which way the market is going to go. It doesn't really matter, because the tactic matches the chart condition and the phase of price action that you see on the chart. I hope that that explains that. So we're going to wrap up now. As I said, we've been going on a little bit longer than we anticipated. Just very quickly, just to bring you back to the quantum trading site. As I said earlier, we've revamped the site, making it much easier to whiz through it and read about the indicators. As I said, we've just had Ninja today, but we do indicators for MT45 and also for TradingView, and we cover all the markets as well. And below here, you've got to click through to the Forex program. That is just for Forex at the moment. We are looking at adding more separate programs, maybe for stocks and options. That's going to be later on in the year. And then there are little boxes that highlight all the individual indicators, and you can simply hop over. This was the VPOC I highlighted. This is the volatility indicator. This is the accumulation and distribution that we've been looking at and what these actual numbers mean. And the indicator is dynamic in that it builds these areas of support and resistance and gives you a clue as to how strong or weak they are likely to be. And as I said, the videos are there, which explains how the indicator works and how you can adapt it for your own use. With regard to cost, the whole package for Ninja comes to 1197, but that is with the Forex element as well. But we also have what we call the Essentials package, which strips out the Forex element of it, and that is, if I bring back the indicators up here, is this one here, 749. And with the package prices, you don't have to buy the package price, you can just buy one indicator or one or two. With the package price, all future indicators that we develop or upgrades are added to that package for free. There is a 7-day money-back guarantee, and you can buy the individual indicators or the package on the easy payment plan. If you want more information, you're more than welcome to drop me a line, anna@annacooling.com, or you can email David at quantumtrading.com. So thank you so much for coming along today. I hope you've enjoyed it, and we will catch you certainly next week for this session, but we are back on Tuesday for the London Forex session, where it's MT5, isn't it, David? MT5, MT45 and Ninja Trader. So enjoy the rest of the trading day. Hopefully, let's have a look. Yeah, YM is still struggling, so we will see what happens, and we'll do a write-up of this webinar, and hope, as I said, we'll see what happens in the rest of the session. So have a lovely day, enjoy the rest of the trading week, great weekend, and catch you next time.